Alright guys, so today I'm gonna talk about the swing trade on EU euro against American dollar and why my bias is very bullish on EU. And today video gonna about a boring lesson to how I framing high probability setup along on EU, a swing trade that may take days, weeks to unfold, and you're not gonna see my face so you can focus. And I don't know how long this video gonna be, but I will just say right to the point and make sure that I'm not boring you. Okay, so the first thing here, you can see my buyers on EU here is very bullish. All right, so let's go to the chart. So I'm gonna draw everything from the beginning so you can have an idea of how I frame the setup itself. So here is EU, and the first things, so here we have a DXY and we have a EU on the daily time framing right here. Let me change this one into a candle. So if you see from here, we can see both are heading toward to the upside, isn't it? This one heading to the downside. And here's the interesting thing: this low right here, and this low right here. If I zoom into it, you can gonna see that the XY index is already break this high right here. See that the liquidity has been grabbed, but EU is not. EU this low is not really reaching this low. So at this level, we actually have a divergence, or I'm gonna say this, a the SMT divergence between EU and the XY. And for me, this divergence actually showing the accumulation in EU, which is the first signal, the first bullish signal. All right, that is the first one. SMT divergence between USD index and euro against American dollar. What is the next one? So the first one, the XY and EU SMT divergence. I'm gonna use this so you can remember it. So you can remember what we already mentioned about. Alright, so the second thing is DXY quickly ranges. Now we're gonna clean everything. So I'm gonna talk from the beginning so you have an idea of what's really happening. Okay, so on quickly chart here, what we have. Now this is gonna be interesting. If I using the average two rand, this is the average two rand, and I set my inverse to 3. So basically it calculates the last 3 weeks average to range. And what is the range currently? It is around 2.6. So I'm gonna draw the range. So here, let me try to draw the range so you have an idea here. 2.6, right? 2 on here, around this region. And here is currently quickly candle on the XY. So on I post my status on, I think this day right here, right? So I post my analysis on YouTube community tab around this day. So we have the rand is plenty to the upside around here, and that is, for me, that is as much as it can go. So we have the quickly rand is around 2.6 right here, and yeah, if it can go up, like I know it's inside right now, but that's the reason why I post to the YouTube community that before the trade unfold, so we can have something to talk about. And eventually, you can see how price really close the range and immediately smack to the downside. But they much more than just the rand itself. But this can be a confluences. All we use, I think, calculate the range is increase your probability a lot, because unless there is some kind of black swan event, otherwise usually a pair will usually move within its daily rand or quickly rand. They usually respect the rand, and here you can see how beautiful it unfolds. All right, so this is the second thing we have as a rand is 2.6. So we have two things. The first one is SMT, and the second one is the XY quickly average 2 rand. Now let's talk about the next one is still on the XY, the same thing. All right, so if you see from perspective, we have a trend line, right? So for why I use this trend line, here we have a one, two, so have a three rejection. For me, three touch create plenty of liquidity zone, a strong resistance, or where people are gonna place their stop loss gonna be above this one, above this one, above this one. Especially after the stop hunt, this one look more valid, and I view it at a liquidity zone. So here is where price is gonna go, and eventually it did. So what does it mean? It means that my entry of the swing trade is pretty soon. I should have a way for the quickly ran to expand to the upside a little bit more, but I enter around here, which is quite soon. I know lesson to be learned, and eventually you can see how beautiful it tapped into the trend line, grabbed the liquidity, and immediately trade down. So that is just another reason that the XY is just going to grab the liquidity. And the reason it's not going here, you will see on the next, you will understand after you watch everything in this video. But the reason it go here is because for me, for my perspective, it heading to around this trend line to grab liquidity. So that is the third reason. All right, so I'm gonna turn off the quickly ran, so because you already see it, so I don't want to make the chart look pretty complicated. So the next thing is we have the doing ran is from this high to this low. So premium level will be above the equilibrium. Let's say the equilibrium is right here. All right. So we have a what? We have the daily order block right here. Now zoom into 4 hour. We have a breaker right here. Flat down candle before price take out this high. So for me, this one be a breaker. The 4 hour breaker, you see, and we have a value gap right here on 4 hours. And looking how this fair value gap is actually respond here. This fair value gap, you see it? Look how price really respecting it right here, right here. Looking at the body of the candle. Even right here when price wick up, it's still respecting that 4 hour fair value gap. And so you can see that we have a what? We have a daily order block. We have a 4 hour breaker. We have a 4 hour fair value gap. And all these things overlay with each other and create a PD arrays matrix. And the PD array is actually powerful when they overlay with each other, create confluences. You can see that that's why I am confident even price go a little bit higher, it will eventually be rejected down due to the PD arrays on premium level. That is the the next region. But the next one is gonna blow you away, blow your mind away. So the next region I want to talk about is also related to USD index. Now I want you to change the chart to 1 year, which is 12 months. Now here's an interesting thing. What do you see? Immediately right to the face, the other block. And another one that catch my eye is this little dinosaur. We almost killed the dinosaur. Alright, so we can see this is the yearly order block. Looking how powerful it is. So if we measure from here, we have the equilibrium here is the mean threshold of this order block. Let's say the red one, and let's make it thick. Right, so on yearly order block, see how price expand the whole year, and now it's touching the mean threshold of the yearly order block. And now when you go into this, let's say we go to daily. Now you see how beautiful it is right now. You understand why this level is incredibly confluences and powerful like hell? Because it cannot go higher because it's really a lot of pressure going on right here. You can see how sensitive this red line is. See how price is pushing around it, a lot of wick, trade up and down right here. Very sensitive because that is the yearly order block mean threshold. And if this is coincident, it's just impossible. Like now we have a trend line, phantom trend line graph here, you see, and price this little candle body close below this yearly order block, and it's go really near to this confluences overlay of premium PDRA matrix. So everything is pointing to the downside. And now let's come back to the yearly. What I'm saying for the long term perspective, this previous high right here is where price atlas going into. And if we measure it on the quickly perspective, we can see that this is around below this high, right? Sorry, below this low right here. So how price moving right now from here to here? This wouldn't be surprised to see price sinking down to the 50 level to to find the fair value, and it cannot go up forever. Now you see how powerful this red line is, and when you combine it with other factors, we have a confluence of beautiful mega trade and a swing trade for the long run. If you enter trade right here, you have all confidence to actually holding it for a longer period of time. If you have enough patience, that is all what swing trading is all about. Is require a lot of patience, a lot. And another one on EU, you're gonna see a trend line just beautifully created on EU right here. Let's make it a little less thicker. All right. So we basically connecting the Dutch right here, and we have a beautiful trend line indeed. When price grabs the liquidity, this one, a lot of buy stop have been taken around here. So if you are a buyer, usually they're gonna have their stop loss below the trend line. And guess what? Price go back down and cling on this stop. And also the people that actually trading like break and retest, it go a lot deeper than the trend line itself. And there's another trend line right here from here to here. See this? So this one, let's even we just connecting varies like this, and people by the trend line stop out. And then it just you can see that the only way to explain everything that happened in a way that we can understand is from liquidity to liquidity. And from here, it wouldn't be surprised to see price go higher because the people that's short now they stop out. People that long they stop out here as well. So it's like everything is clean and price now however everything is required to go, and that is a lot of things. I think trend line break retest on D1 on euro again American dollar. I actually don't know the word phantom is. But yeah, so the first reason the XY and EU SMT diversion. The second reason the XY quickly average true range. The third one the XY trend line liquidity grab and the BDA raise matrix and the yearly order block mid threshold, and the trend line here, the trend line bridge, this trend line bridge, a lot of liquidity taken. And here's the interesting thing on quickly perspective. I think I haven't looking at it, but if you do look at it, you can see a low right here. Now on monthly chart, that is a last low. If we go down more, we kill this one, the dinosaur. I don't think it. And you can see how beautiful it closed all the body above the high after grab the liquidity. It never go lower. So everything is just beautiful, and everything is just And the kind of trade they doesn't come every day, but they are a perfect example of how patient and waiting for confluences and have a repair plan can actually give you the high probability setup. And the kind of now let's say you are a scalper or day trader, how you can benefit from the kind of analysis because it's very long term play. Well, you have the daily buyers from now look like for the next few weeks or month there's some kind of market shift to the upside for EU for the XY going to be bearish, and that's how you framing your day trading. There are a lot higher chance that you're gonna win if you determine the daily bias correct. If you are scalper, well, you may not really need that because scalper we can go to 1 minute chart and scalping around like intraday buyers. But still, everything has its value if you know how to use it. And I hope that you find this video insightful. And yeah, I'm focusing on giving values now. I'm done proving myself. So I hope you enjoy it. Let me know if you want more of the kind of video. Wish you good luck and good trading.